I think we can briefly look at the block of what has been done for the past 5 years, or to a very significant extent, Jan took us to what's been done in the US. I will flick through the way it's been done, and the other presentation went through the European dimension as well, but maybe there's a little bit more to say on what's been done in Europe on this. After we've done that, I would like to take an illustration of the underlying assumptions of financial regulations and show why and how what has been done, in my view, will not solve the big problems or not sufficiently solve the big issues in financial sector. And then I will finish with some sort of, thinking aloud, dreaming aloud as to what we could do, even though it's not at all on the table of legislators or regulators today. So, briefly to start with, what has been done, what can we say about it, and is the job done or not? The first block of regulation that has been adopted, you know that in the EU, the way, as a European I will dare say, we work in Europe as opposed to the US. US you had Dodd-Frank, and then in Europe you would call that implementing acts. In Europe you had one piece of legislation for every topic. When everything's finished, it should be equivalent, but the legislative process is clearly different. The first block of regulation has been on banking issues, and basically it's been implementation of Basel III, CRD4. There's a lot of horrible acronyms in the US. So stop me if I use too many of those acronyms. But capital regulation, directive, and regulation. To summarize very, very briefly a very long story, what is striking is that the shortcut, speaking under the control of a central banker here, is that yes, Basel III has been implemented or is now being implemented in EU countries, with one big exception, and this is somewhere where we Europeans have been much weaker than the US, is that binding leverage. There's two ways of calculating capital for banking institutions. Either a calculation based on risk-weighted assets, which basically says you have one of assets and you work out a probability, that's the IRB that Jan was talking about, and you say, okay, the actual risk-weighted asset is a fraction of the total assets. Typically under Basel III definitions, the ratio between total assets and risk-weighted assets on average in the EU is about 2.5. So, it's about 40 when total assets should be 100. So, risk-weighted assets is one way of calculating capital for banks, and the other one is a much cruder way of doing it, which is leverage, equity compared to total assets. Basel III said we need simple leverage as backstop. We will calculate the equity a bank needs to issue, on risk-weighted assets, percentage of risk-weighted assets, but we'll use, a 3% backstop on simple leverage. The European Parliament and the European Council, as we know, we have co-legislation system in the EU, didn't adopt that. So, contrary to what the US did, that has not been adopted in the EU. It has been said that in 2 years' time we will review it and look into it again and everything, but it is not the backstop that the Basel Committee had asked the various members of the Basel Committee to implement. So that's clearly something we've been weak on, and that's the result of, it's been said in previous presentation, of the financial lobby, which hates the simple leverage, and the amount of pressure and the debate been incredibly even hard and sometimes very unpleasant on simple leverage. I mean, it really literally came to insults, in fora like this one, oh, you're a member of a sect, of the leverage sect, or whatever. So it's been interesting, but what's interesting is that the leverage sect, so to speak, to which I belong, didn't win. The other big block that has been adopted, which has been a major breakthrough, and we shouldn't, this is clearly where we shouldn't say that nothing has been done, is the so-called banking union, which it's a huge topic, so I'll be very, very brief on it. There's 3 pillars to banking union: single supervision, single resolution, and a resolution fund. Single supervision, to make a long story short, is done. As of 2 weeks from now, we'll have a single supervisor. I'm sure the central banker could take us through all the complexities of the actual implementation of single supervision. It's not perfect, we're in the real world, but it's going, I feel, in a direction that makes sense, because we have to strike the right balance between the supervisors not being too close to the supervised, because otherwise we have complacency, and we've seen many, many, many examples of complacency in many European countries, still thinking Europe here, in the past. At the same time, you need to keep that proximity that you need in order to understand what's going on and know the institutions that you're supervising. But single supervision in the EU, there's been very, very serious progress. Let's say things as they are. Single resolution, there's 2 texts that have been adopted. Resolution, BRRD, BRRD. Recovery and Resolution Directive, and also the directive that put in place the Single Resolution Board. Those 2 pieces of legislation are 500 pages long each. When you read them, they give very, very, very significant powers to the Single Resolution Board that will be put in place before the end of this year. So once you've read that, you have 2 readings. If you want to be optimistic, you say, well, if they, Commission and Parliament, appoint to the Resolution Board proper professionals that are not captured, that have the vision of what needs to be done, everything will not be solved, but we'll have made a significant progress on the path to resolving too big to fail, to be short. If they appoint sometimes reasons to be scared, frightened, skeptical, people who are complacent, I'm sure they will be competent. There are plenty of competent people out there. I have no doubt about the competency of the people who will be appointed. But you need people who are competent and independent and not complacent. Then, things will not happen. So I think we as a society, you as academics, and certainly a message I'm passing to a number of legislators in Brussels, should keep an eagle eye on whether the people appointed will have the level of independence that is required to be a proper resolution authority. And behind that, there's of course the big debate. Typically, for those of you who've read, the books by Schiller and Tim Geithner in the US, there's the bail-in school and the bailout school. If you take a Geithner, he takes 600 pages to explain that bailout is indispensable for financial stability. If you take a Schiller, she says, no way. We have to end bailout. And guess what? We have exactly the same debate, even though it's less public in financial institutions. So what I'm saying here is that Single Resolution Board that is being appointed in the coming weeks will make a big difference whether to continue on that comparison, they appoint a number of Schiller or a number of Tim Geithners to run it. The other block of regulation that has been adopted, I referred to it earlier, is the financial market regulation, so-called MiFID. Basically, MiFID is a patchwork of many different bits and pieces, dealing from everything from market microstructures, high-frequency trading, commodity derivatives, consumer protection, you name it. And when you think about it, the coherence of those different topics, especially when they're not related, could be debated. For lack of time, I'm not going to go into the detail of all that. I would say that at the margin, a number of things have been improved. but given the complexity of the MiFID process, and that's a very interesting process, I mean, phenomenon to keep in mind for all of us. Effectively, what happened at level 1 was to give the possibility to regulators to take the right measures at level 2. So effectively, the legislators said, okay, we should probably do something. This is very complex. Fine-tuning, please, regulators, tell us how to do it, and come back to us once you've done that work. So effectively, the power to regulate on all those financial market issues, which, yes, are quite technical, has been given to regulators. And it's interesting when you're in that game, inverted commas, to see how it's happening with regulators today, and obviously with a lot of lobbying of regulators by a number of people. Third big block of, so just to finish on that, if you ask me, okay, has MiFID achieved something, yes or no? I cannot give you a yes, I cannot give you a no, I can give you a, well, it will depend on the way level 2, i.e. regulators, do their work. Which, even from a democratic standpoint, is an interesting process because the actual power has been delegated to the technicians. The third big block is really investor protection. Many acronyms there, from UCITS to PRIPS, AIFM, you name it. Here again, improvement at the margin on a number of things, a lot of struggles. Could give you the examples of a apparently very simple piece of regulation called PRIPS, Packaged Retail Investment Products, which is about informing customers. All it is about is when a customer buys a financial product, a packaged financial product, which can be, phone, life insurance, pension, that person should be informed of what he or she buys. She should know in very simple words on 2-pager what he or she is buying. The text has been passed, it's better than nothing, but it's been watered down to remove pensions, to prevent a number of very simple measures to let customers know what they're effectively buying. There's been progress. One progress has been the fact that so-called warning label, very much like on packs of cigarettes, has been introduced for very complex products, but we still need to see how regulators will apply that, what's a complex product and everything. But in theory, if you buy a very, very complex product, you have a health warning saying, this product can kill. That's in level 1, to be seen how it goes down at level 2. But so here again, it's not a case of saying nothing's been done. In terms of amount of regulation produced, it's been enormous. You're talking about tens of thousands of pages, literally. I would tend to say this is too much because nobody can cope with that sort of regulation. I mean, it's just too much. I mean, I think we need a few simple rules, but not so detailed. What is striking is that today politicians have like a sense of relief because they've been working very hard on all those texts, negotiating days and nights, literally for years and years, saying, job done, tick the box, I've done the job. And I would say a lot of them are sincere when they say that because they have actually worked, they have done their homework, they have got into those technical topics, they have passed legislation, they've negotiated the compromises, job done. And it's almost funny, almost amusing to see, the sense of relief they give you about, it's behind us now. We've done a good job, haven't we? You've done a job. But what frightens me is that I think a lot of them are convinced that they've done what needed to be done to prevent the next one, and I'm not 100% convinced that it's the case.